Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena, and with me is Vinny Motiwala. And this is the show where we take you through all the stocks that are in focus today in today's trading session, either on the back of research, news flow, or technicals. But before we get started, we'll take stock of where the market is at. Vinny, a decent day of in the markets. Market is holding on to the gains. In fact, global scenario, the global sentiment has eased off a little, given the kind of days that we have seen in the past. It's looking a little better, and of course, contributing to the day is the PSE pack, which is doing pretty well in trade today.
Absolutely. Obviously, private sector entities, they are managing to hold on to good gains. But Ankita, like yesterday, I think today also from the day's highest point, the market has come off a bit. But still 24,200, good level, 0.8% of uptick that we're seeing. So keeping an eye out on that, yesterday what happened, we saw a sudden fall coming in the second half of the day. Is that something that we're watching out for today? Let's keep an eye out on that. But right now, Nifty managing to hold on to good gains, Sensex 2 holding on to those gains as well. 0.8% of gains coming in there. Broader markets, mid and small cap, let's pull that up. Outperforming again the benchmark indices. Nifty mid cap up almost more than 1%, 1.9% approximately right now. Yes, Nifty mid cap is up 1.9%. Nifty small cap 2 trading with gains of more than 2% as of now. So clearly again outperformance has started coming in from the mid and small cap. Like Ankita was also mentioning, PSEs, that's the one we are keeping an eye out on. And other than that, Nifty media today again is buzzing in trade. So what we have in terms of public sector entities, I beg your pardon, not private. Nifty public sector entities like ONGC, Oil India, Coal India, Life Insurance are something that are managing to hold on to good gains. PSU banks also are something that is buzzing in trade. And as of now, when I'm looking at it, all the sectors are trading in the green. So an interesting day, Ankita, coming in there. Not much of a decline that we're seeing right now off the day's highest point for the Nifty, but surely managing to hold on to some bit of a gain.
Absolutely, Vinny. But let's get started with all the stocks that are in focus today then. For that, we are joined by Nagaraj Shetti, who's a technical and derivative research analyst from HDFC Securities. And on our research team, we are joined by Jinay. Hi, both of you. Welcome to Market Fatafat. So without further ado, let's get started with all the stocks that are buzzing in trade. Cummins is the name that is, in focus, has been in focus today since morning. In fact, after its quarter results, but more importantly, on the commentary that has come in by the management, and after that, we did see the stock move up a bit. According to the management commentary, then they said that they see a double-digit growth guidance for FY25. They also expect to grow 2x of the GDP, which is around 13 to 14%. They feel that they have been able to pass on the benefits to the cost benefits to the consumers, and they will reduce their debt by 800 crore rupees using the funds from the IPO. But let's look at the numbers as well. We see a revenue uptick of 4.3% on a year-on-year basis. The net profits have come up 33% on a year-on-year basis. The margins have also seen an expansion of 486 basis points. Also, a couple of other news flows, resignation of Mr. Ashwatram, who's the MD starting 31st of August 2024, and they've appointed Ms. Shweta Arya as the additional director and MD starting 1st of September. Couple of brokerage notes then. Nomura is maintaining a neutral on the counter with a target price of 3,470 rupees, and USB is also is maintaining a sell on the counter with a target price of 2,190. That's the news on Cummins.
But let's listen into the management in terms of the con call highlights that we had, because that guidance is surely something that the street started cheering. Given that Cummins Inc. had not given that much of positive guidance, we saw the stock fall that time. But today a sharp up move that we're seeing. So listen into the con call highlight.
We continue to maintain the guidance of our ambition to grow at a minimum of 2x of the GDP, which in this year at a 6.5 to 7 is somewhere between 13 to 14% is what we think we should be able to grow. Our internal aspirations, of course, are to do much better than that. So that's what we are all working on. We have also had this ambition of growing profitably. So we continue to focus on all aspects relating to profitability. So not have growth just for the sake of growth, but continue to do it with healthy profits.
Okay, let's move on to the next stock. And Nagaraj, you picked out Jubilant Ingravia for us, and this is from the pharma side. Percy, good afternoon, and take us through what are you viewing at in terms of the target price over here? What is the level that you're maintaining?
Hi, Vinny. Good afternoon. Jubilant Ingravia has been in a constant up move recently over the last few weeks, and the overall chart pattern is looking positive. consistent higher bottoms on the weekly chart is indicating that this stock has more strength to move up further. I think the next upside resistance to be watched from here onwards is 720.
Still an upside we're expecting there.
All right. Moving on, Vinny, Fusion Micro is a stock that you picked out for us. Tell us what is the performance, quarter one performance looking like for this counter?
I think, Ankita, the minute the stock chart comes up, we'll know that it's not very exciting for Fusion Micro. Weak performance clearly has come in from the company in terms of the increase they've seen in cost. The asset quality has worsened, and that is why we're seeing downgrades also coming in for the stock. Now, JM Financial has downgraded the stock to a sell. The company reported a loss this time of around 35.6 crores versus a profit estimate that one had. So, yes, clearly that pressure came in higher than expected. Provisions also came in from the company. Credit cost of 12.8% versus 4.3% last quarter. Guidance was of 3%. So this increase in credit cost is something that's worrying the street, and because of that we're seeing asset quality trouble. Seems like that's emerging for the company, especially in Punjab and now other multiple states. So that's why JM Financial also downgraded the stock and reduced their earnings estimates substantially by 70% and 44% for FY25 and FY26. But listen into what the management had to say about their outlook as well. Listen.
We remain watchful of the situation on ground and remain hopeful for improvement of performance in Q2. We expect to bounce back to normal business performance expected from us from Q3 of financial year 24-25. With both our initiatives and industry level steps start yielding results. We are calibrating our disbursement in line with the portfolio risk assessment. We have stopped fresh disbursements in 104 branches. We are further tightening our customer onboarding criteria. Our incentive structures have been revamped with more alignment with collections. The higher than usual slippage in our portfolio quality towards the later part of June led to increase our steady state credit cost to around 1.28%.
We will continue to work on optimizing our cost of fund. We expect to maintain the cost of fund or marginal cost of fund at the similar level.
All right, coming to you, Jannay, NCC is the name that you have picked out for us, an earnings candidate, and it is up and away in trade more than 3.5%. Tell us, how does the report card look like?
Well, yes, so we have actually a brokerage note by HDFC Securities. They have maintained their buy rating and hiked the target price to rupees 359. What they believe is that the company had a strong Q1 and it is well placed to sustain the growth. We did see debt going up a bit, but the management said that this was seasonally and should be normalizing going ahead. Now, NCC reported a 23% strong revenue growth in Q1 despite the election disruptions, and IIFL Securities believes that with strong order book which stands at around 52,600 crores, NCC is well placed to deliver over 15% revenue CAGR over next 3 years until FY 2027. Also, they are estimating a 26% EPS growth CAGR for over FY 2024 to FY 2027, and on the back of this, the currently stock is trading with the gains of about 3.7%.
Okay, that is NCC for you all. Keep an eye out on that one. But I just want to mark the flashes and the numbers of Safari Industries. The stock was trading with gains of almost 5-6% at one point of time. Right now, seems like it's given up those gains. Though revenue has seen a growth of 5.5%. We are seeing in terms of the numbers of the company as well. Profits of the company down by 11%. So yes, maybe because of that reason, from those highest points of the day, we're seeing a decline coming in for Safari Industries. VIP Industries had also reported their numbers. That was not exciting. EBITDA of Safari Industries is down also by 16% on a year-on-year basis. So clearly seems like some bit of a pressure that's coming in on the operational front. Margins down by almost 400 basis points, and the stock is off the day's highest point, though holding on to gains of 2.65% as of now. But yes, that's Safari Industries for you all. Let's move on. And Nagaraj, talk about Manapuram Finance then, and what is that you're watching out from this gold finance here in terms of a stock move that one could be expecting? Where should we see it headed in terms of levels?
Yeah, recently it has witnessed a sharp downward correction from the higher levels, and currently it has found a lower top and placed at the edge of the support around 200 to 199 to break below. So the overall chart pattern is looking positive for the Manapuram Finance. I am expecting this stock to move down to the nearest important support of 200-day EMA, which is currently placed around 180 levels.
All right, with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we get you lots more stocks that are moving in trade. Welcome back. You're tuned into Market Fatafat. Where we are telling you all the stocks that are buzzing away in trade. Tata Power is in focus today on the back of its Q1 results. If you look at the results, the revenue is seeing an uptick of 13% on a year-on-year basis. Even though after the results, we are seeing a decline coming in on Tata Power of cuts with 2%. Revenue is up 13% on a year-on-year basis. The PAT is also seen an uptick of 4%. The margins have expanded 139 basis points, and the EBITDA came in at 3,586 crore rupees versus 2,943 crore rupees, up 21% on a year-on-year basis. Also, we have brokerage notes. Investec come out on Tata Powers. They're maintaining a hold and they've hiked the target price to 467 rupees. And Axis Cap has also come out with a brokerage note and they've maintained an ad and hiked the target price to 500 rupees. So that's the word coming in on Tata Powers. Currently, the stock is declining in trade with cuts of 2%.
Okay. On that note, let's also listen into what Tata Power's management had to say, especially on the solar and renewable side, and what's their focus area on that front. We spoke to MD and CEO Praveer Sinha. Listen in.
We will see much better performance going forward because now we are manufacturing the modules ourselves. The module line is fully commissioned and the cell line will get commissioned partly this month and partly in the next month. So I think you will start seeing very good results in our renewable business from third quarter onwards, much better margins and much better profitability. We are the biggest in the rooftop business in the organized sector. We have more than 20% market share. We have huge plans to work with the government, especially the PM Surya Ghar program. And we are enhancing our capability both in terms of our channel partners, as also in terms of the reach that we will have with our own teams and the supply chain. So I think over a period of time, you will see that we will become one of the biggest players of rooftop solar in the country. We will become very, very resilient in terms of our supply chain and also consistency in terms of quality and the price of the modules. That will help us to get better returns and margins on the projects that we bid. And also in the rooftop solar where there is a necessity of providing DCR modules. That means both the cell and module has to be manufactured in India. So I think renewable will play a very, very important role. You will also see that there will be a lot of growth in our hydro business, the hydro in Bhutan, as well as the pumped hydro in India.
All right, that was the management of Tata Power. But Nagaraj, coming to you then, United Spirits, you've picked out for us. Good moves coming in on this stock. In the last 1 month, it's seen some good moves. Tell us what are you seeing on the charts for this one. In fact, it's trading very close to, it's hovering around its 52-week high right now. So what is the upside that you see going ahead?
Yeah, overall chart pattern is very strong. We have seen a gradual upside momentum. In the past also charts, whenever you've seen the sideways swing movement for the stock, it has eventually upside broken out of the range and moved up. Recently also similar kind of a thing has happened after moving into a range of few sessions. The stock has moved up in the last couple of sessions, indicating the strength of upside momentum. Overall chart pattern is positive. RSI as well as volume is breaking out of the consolidation. I'm expecting this upside momentum to continue for near term, and the next overhead resistance to be watched for the stock is around 1550.
Right, let's move on to the next stock, and at stock number 8 we'll talk about JTL Industries. Nuvama has initiated coverage on this one. Buy rating, target price of 303 rupees per share. Today the stock is trading with gains of 3%. Now what they believe that this is a shot in the arm, especially coming in for capacity expansion that will be driving robust growth for the company. They're focusing on value-added products that will strengthen the margins, and obviously robust profitable expansion. That is something that is a positive, and they forecast for PAT CAGR of around 38% over FY24 to FY27. So quite positive on this one. Stock managing to hold on to good gains of 3% as of now.
All right, coming to you, Nagaraj. IRCTC is what you've picked out for us. Last 6 months, this stock hasn't moved. It's in a consolidation mood. In fact, in the last 1 month, it's been down 11%. What do you see this on this stock? Do you see an up move now?
Yeah, stock is looking weak. We have seen the distribution kind of a pattern forming at the higher levels. I think some reasonable downward correction could be in store. We have seen a formation of a bearish head and shoulder that pattern on chartically, and recently it has witnessed a downside breakout of this pattern around 960, 970 levels. The trend remains weak. I'm expecting this stock to come down towards the next support of around 825, 830 levels.
Okay, that's IRCTC. Keep an eye on those levels. But Janab, Bharti Hexacom, this is an earnings candidate?
No, so actually Bharti Hexacom is focused on the back of brokerage note. Ambit have maintained their buy rating with the target price of about 1,580. What they believe is that company's EBITDA remained flat sequentially because the network cost increased about 34% Y-on-Y basis. Also, if you look at the operational performance overall, it has been better than its peers. Also, they believe that overall financial performance has been muted because of the non-cash items, and revenue and subscribers outperformance still continues when you compare them to peers. Now, they're estimating a 22% EBITDA CAGR over FY 2024, FY 27, and they are valuing Hexacom at 18 times of FY 26 estimated EV/EBITDA multiples.
All right, Nagaraj, coming to you, BKG is what you have picked out for us. Good moves coming in on BKG actually. Tell us, is there more upside or how should one play this counter?
Yes, there is more upside for the stocks. We have seen the stocks also in the past witnessing a decisive upside breakouts after moving into a reasonable period of range movement. And this is what exactly happened for the stock. After moving into range over the last few weeks, the stock has started to show a decisive upside breakout of around 740, 750 level, currently trading around 769. I think this upside momentum is likely to continue for some more period, and I'm expecting this stock to reach towards the next upside resistance of around 850 in the near term.
Okay, let's move on. And the Union Budget 2024 has created a new investment avenue in the form of NPS Vatsala, which is designed to support long-term savings for minors. It could be launched as early as this month. Let's go across to Anurag Shah, who's picking up all those details. Anurag?
Finance Minister Nirmala Sitharaman announced NPS Vatsala scheme in budget, and there are a couple of people want to invest in NPS Vatsala for their children, for their grandchildren, but the product is yet not launched, and as per our sources, in next 2 weeks NPS Vatsala will be launched, and FM Nirmala Sitharaman is only likely to launch this product NPS Vatsala. So experts are saying that for long-term compounding, NPS Vatsala will be an ideal product where parents, grandparents, guardians can invest early for their children retirement, because the long-term compounding will happen in the NPS Vatsala. So if a minor of age 1 year, of minor of age on the name of minor of 6 months also, this NPS Vatsala account can be open and their guardian or parent can start investing, and at the age of 18, this NPS Vatsala will convert into a normal NPS account. So we have seen that there is a traction about the NPS Vatsala scheme, and PFRD, the pension fund regulator, is working for the guidelines of NPS Vatsala scheme, and once the guidelines are finalized, this product will be launched to invest.
All right, with that, it's time for a quick breather. Don't go anywhere. We'll be right back.